Monday, the 9th of November. Welcome to Frontier Opening Bell. I am Boston Amafaye, and we're very grateful to have all of you here on the show today. Let me start from Joshua Debisi from Vetiva Capital, the banking sector analyst. Akintunde Sulaiman, who is from Greenwich Merchant Bank, and Alikan Sacho in Nairobi, the CEO and founder at Reach Frontiers Management. Gentlemen, thank you very much. We appreciate your time.
Thank you, Boston.
Good morning. Let's hit the ground running. South Africa and GSE, of course, was the star performer on the continent last week, despite the topsy-turvy around the U.S. election and the vote counting. The market went up 2.10%. Egyptian market went up 1.08%. Nigerian market up 1.856%. And then for those who also came in through, 1% for the Kenyan market, 0.9%. And the Ivorian market softened 0.1% on Friday, despite a very strong showing a few days after the election or re-election of President Alassane Ouattara for the third time. If we go straight to the East African market, and that's where the Capital Market Authority, that the CMA, is trying to resolve issues around corporate bonds illiquidity. Ali will take us through that a little bit. Mozambique is keeping interest rates unchanged at 10.25%. Stanbic Uganda has named a new CEO, Andrew Mashanda. Ali, let's get started around the Kenyan market with the central bank and the CMA.
So the Capital Markets Authority has been concerned for some time about the illiquidity in the corporate bond market in particular. And there have been some pretty big accidents in that market. ARM, Arthur River Mining, of course, which unfortunately came very unstuck and has gone into liquidation. In Nakumat commercial paper, where people also got their money blocked. So there's been a series of these problems, and the Capital Markets Authority is trying to reorganize and increase liquidity in that marketplace. I don't think it's as straightforward as bringing more regulation to bear. It really is about the credit worthiness of some of these companies which have been able to access the corporate bond market, when really, had you done some rigorous analysis, you wouldn't have touched some of these bonds with a barge pole, I'm afraid. So, well, let's see. They're invested in the issue. Let's see what they come up with. This morning, before we came to this program, Safaricom released their first half earnings. Safaricom is about 50% of the market capitalization of the Nairobi Securities Exchange, so very much a bellwether stock. Just let me talk you through some of the headline numbers. Half-year service revenue declined 6% to 118.4 billion shillings. Provision for expected credit loss was up more than 100%. That was an interesting bit. Half-year profit before tax down 12.8%. Half-year profit after tax down 6%. Half-year earnings per share down 5.7%. Just to talk you through the underlying numbers, customer growth, and this is the African demographic dividend story, was up 10.2%. And this is a serious tailwind for companies that are tapping into the mass market. Voice declined 6.5%. More and more people using data and WhatsApp, as we know. Mobile data up 14.1%. The big issue was around M-Pesa. We've discussed this, we've flagged it before. The zero-rated cash transfers on M-Pesa weighed hard on our half-year results, said the CFO. This is our most impacted portfolio during the period. Basically down 14.5% in that half-year release. ARPU was down 23.5%. Now, overall, this was, I think, in line with expectations. They had an improvement in the second quarter versus the first quarter, when we had the really hard lockdown. I think, you buy the share on reverses. They're riding this big macro post-COVID wave of digitization, mobile money, etc. I think they're well positioned to ride that. This was a period of defense, and I think M-Pesa in particular will turn out to be a blip on the radar. And you're going to see a strong recovery in those M-Pesa numbers as we move forward. So overall, I think in line with expectations. Some folks might be disappointed, but I would say you buy that share if it starts to deteriorate on profit taking. Headlines quickly: Kenya Central Bank raising 27.55 billion T-bill auctions. We're not at 0.5% like yourself, but we're seeing good demand out of the banks, and I think that's a consequence, person, of banks not lending at the moment, a contractionary economy, and therefore liquidity, surplus liquidity, being parked in the T-bill market. And then Stanbic Uganda, the biggest bank in Uganda, appointing a new chief executive officer. That's a very strong franchise, like it is in most parts of Africa.
Okay, thank you, Ali. We will watch very closely what happens to Safaricom's share price today on the Nairobi Securities Exchange as a bellwether, if you're accounting for about half of the total market equity cap of this big exchange east of the continent. Thank you for raising the curtain. Actually, Suleiman, we'll get to you in just a second around the Nigerian market. We were talking about 0.5% yield on our marketplace. But just a quick one to give everyone a sense of how the Nigerian big stories within Nigeria and West Africa. We'll talk about the Ivory Coast story, but the big story that's been going around towards the end of last week has to do with the central bank getting court order to freeze some bank accounts of NSAS protesters, or those who are said to be the leading light of the protest. The rising cases of fraudulent crowdfunding is getting the attentions of the regulatory authorities in Nigeria, in particular the FCCPC. The Consumer Price Protection Agency is torn between whether crowdfunding is a consumer issue or is an investor issue for the SCC to handle. The Dangote Cement 9 cement numbers are on the street, better than expected, earnings per share 12.25 naira. Ghana, the authorities are piling into the electricity sector very rapidly. 4 million shillings in debt has been paid to the company, and another $130 million to ramp up electricity supply. That's all good news for Ghana, which is the headquarters of the AFCFTA. If you house the secretariat, then you have to make a good showing of being the host country, by the way. Akita Suleiman, let me start with you. When we look at this issue around the crowdfunding in Nigeria and what the FCCPC is beginning to see as a problem, some folks on social media says they've invested, they're not getting their money. What's your take?
Yes, thank you, Boston. I think due to the low rates we're seeing in the market, you see investors looking out there for high yielding securities. This is what those Ponzi scheme and the scammers tend to look out for. They tend to play on that test for high returning investments. Crowdfunding is a mechanism that is one of those alternative ways of raising funds. It's a very rich one. In Nigeria, we've seen about 20 billion across the agri-tech companies. About 20 billion raised across the agri-tech company. It's a source of fund that is important. And I think earlier this year, we saw the SEC raise some regulatory framework as to regulating that space. I think it is important for the SEC to swiftly that process in order to safeguard that area or that focus of the market. Because if we do not, regulations are meant to curtail our financial markets from being idumota markets. So it will be good for them to bring out those regulations now to protect investors from falling into this sort of scams. I think Tunde Rukera, who is the executive chairman of the FCCPC, is doing I think he's doing a great work. Before now, the FCCPC didn't used to be as prominent as it is now. So I think if we see agencies across the economy trying to protect investors is good. I do not think we should put them against each other and say, oh, who is meant to do this, who is meant to do that. It's protecting consumers. I think is great. And then the SEC as well, be the apex capital market regulator, should as well look at having a regulatory framework. I know there was one draft that was released sometimes in Q2, which has not been effective. I think they should swiftly that process to put it out there, which would form some sort of regulatory framework as to who can raise capital through that crowdfunded platform and who cannot. Because it is, I think it is important for we as capital market operators at this time to protect prospecting investors. Because you agree with me, alternative investment and alternative means of raising capital aside debt and equity is quite, it's like the sole burner of our capital market. And investors have not still trusted the fact that there are alternative means and alternative assets of investing. For example, the derivatives market, we saw shallow it's been in Nigeria, regardless of it's been floated by the backed by the SEC. You see as well the mutual funds and the ETFs, they've not sold as well as those other form of assets. And so crowdfunding is another, I think, another baby that SEC needs to protect. And investors looking for a solid ROI, they need to be careful because there are a lot of these funds out there, there are a lot of these agri-tech companies out there that do not actually invest in what, or do not go through the process in what they say they would invest in or follow due process. So I think investors should be wary. The regulators as well should be wary because amongst their tasks is to protect investors and ensure that the capital market is developed. This is one of those acts of development that those regulators or the regulators should look out to. So I think SEC should hasten that framework, that regulatory framework for managing the crowdfunding platform.
I agree with you totally. We need to quickly ring fence that process, that platform very quickly before the market gets messed up. Because if it goes without it, we could have a whole egg on our face in which it will just come from out of nowhere and just rubbish the market is trying to get investors' confidence back after the 2008 fiasco of the stock market, of the market bubble, the boss, the private placement fiasco, the IPO, the PPO, and all of that. Joshua, very quickly, with the central bank and this NSAS blocking of accounts and all that, what are you learning in the industry? What more can you tell us?
Well, I don't really have any, direct information at the moment because there have been conflicting reports. So we don't know who to believe or who to trust because some bank executives have come out to explicitly state that they have not been involved in the blocking of any accounts that are not, related to fraud, and that they would never take such a directive from the government because the government, has no right to block those accounts as long as they are not engaged in crime or in terrorist activities. So as far as we know, they have denied any allegations that they blocked any NSAS accounts. But the issue with the NSAS protest is that it was a very decentralized protest. So there were multiple organizations, should I say, going about raising funds to sort of push their agenda. So we don't know who was raising on behalf of who and what means they went about doing so. Now, if there are any kinds of protocols that they were meant to follow, we don't know who followed the protocols and who did not, and we are not sure about basically anything with regards to the protest because of how decentralized it was. But like I said, the banks themselves have come out to explicitly deny any legally, because that would just be, akin to a dictatorship, really, because this is not something you do in a democratic society where people are protesting peacefully and are raising funds to push that protest without inciting violence. Then there should not be any cause for the government or for the CBN or for any bank to block those accounts. So these allegations, unfortunately, we will not be able to confirm them at this moment because the banks themselves are coming out to deny that they've done anything wrong. And, you know, the people claiming that accounts have been blocked, we don't have any official way of knowing, you know, who is who and who controls what. So we can't even be sure that they were, you know, raising funds like Akintunde said. You know, some people might have used it as an opportunity to, you know, collect money and just disappear with it. So that's another issue that needs to be addressed and looked at. So I think a lot of investigation has to happen. Yes.
Yeah,
so that's the
I
main
think a
issue.
whole lot needs to be verified. I agree. A whole lot needs to be verified. Fake news, social media, whatever it is, it's a whole bunch of the depth of the sea. You can't tell what animals your net have picked up until you put them under the boat, and then begin to separate the wheat from the chaff. And until perhaps those whose accounts are legally blocked or illegally blocked and come up and perhaps go to court and come up with a reclaim and disclose themselves. I think the market, and I think Ali will agree with this, that the market is about disclosure. The market is about disclosure at every point in time, transparency and disclosure. If you feel that your account is being illegally traded on or being blocked, then you come out openly and challenge the authorities to it. Ali, isn't it?
Yes, I think you're quite right in that context. But what I would say is, you know, banks themselves are going to be very, very careful now about taking any instructions of this nature, because the reputational damage down the track could be very, very high. Similarly, you know, in, for example, Tanzania, during the election, Vodafone blocked SMSs, basically was seen very much to side with the government. So I think, you know, I think transparency, full disclosure, and there is an enormous task in reputation management, which I think banks and telcos in particular are very much in the firing line now.
I agree with you. Look at Ethiopia with the blockage of internet. Even as we speak now about the Tigray region, assault, military assault and all of that. It looks like, and it's happening in Cameroon as well, between the Francophone and the English-speaking region in Cameroon over the last 1 year or two as well. Some internet access being blocked about the English-speaking away from the French-speaking. I think it's becoming an issue across Africa, and this has to be looked into. Let's look into Southern African economic markets very, very quickly, with South African Airways getting 10.5 billion rand in bailout, but the authority says it's been cherry picking who will benefit from this. The GSC is moving to have a digital private placement platform. I'm sure we can do that in Nigeria. Perhaps we need to introduce some of this innovation to see what we do with the crowdfunding, even in agri sector and what have you. Bond purchases by the SARB, by the South Africa Reserve Bank, eased to about 410 million rand in October. Pepkor revenue, 3.6%, but says it also posted 5 billion rand loss in the 5 weeks of the lockdown period. Ali, quickly, your thoughts around not just the Pepkor earnings. I know the earnings is, but again, the South African Airways bailout in particular. Is there a silver lining here?
Look, you know, my concern is the macro situation, where I really am not convinced we're going to see a serious recovery in tourism and air travel for the foreseeable future. And by that I mean not only this year, but probably the whole of next year, given what we're seeing in the trends. So I think a lot of airlines, particularly the African ones, are going to rely very, very heavily on state support. And until now, I don't know whether the South African government has reformed South African Airways, has actually managed to cut sufficient costs to put it back on a path to profitability. It reminds me of that boy in the dike. You know, you keep putting your finger in the dike. I don't know whether the South African government have resolved this matter sufficiently. It's important. South Africa is an enormous tourism destination, but you know, this is a little bit like Groundhog Day. Every year we get the same story and a bailout and so forth. So You know, Tito's spoken aggressively, but he said, you know, he described it, you know, it's like a turkey does not vote for Christmas. And the question is, you know, is South African Airlines a turkey, and should it be served up for dinner, or should it be bailed out? Joe, Johannesburg, South African assets on a bit of a roll as people get optimistic about Biden taking on risk on the Rand below 16, Johannesburg Stock Exchange on a roll. So that's a positive. And that first headline of yours, JSE partners UK Global Cap on digital private placements platform. This speaks to the JSE again. You know, they are ahead of the curve. They're looking at these innovative ways to raise finance. You know, you're putting it on a transparent platform. It brings, consolidates things. And I think that's what other regulators should be looking at. Instead of allowing these things to develop their own steam off market, this is the way forward. Bond purchases easing, that I think speaks to renewed risk appetite globally, so they don't have to step in as aggressively to support the South African bond market. They can take their foot off the accelerator a little bit. Retailer posting 5 billion loss in revenue during the 5-week lockdown period. We know it was tough. It was a proper lockdown. The question is, you know, if we see an upsurge, are African countries going to revert to that hard lockdown? I don't think so. So I think in that respect, that's a bit of relief for some of these retailers.
Thank you so much, Ali. Joshua, what's your outlook on Nigeria's market week? We're still waiting for these earnings from the big banks, and it looks like I'm getting a little bit, I'm not tired for waiting, but I just wish they just come so that we just have this whole thing cleared up and we can just say this is the final weeks of the year.
Right. Well, I think there's no need to be impatient just yet. I think we can start to, you know, worry if we enter the final month of the year. If we enter December, then there will be real cause for concern. But I don't see a reason as to why that should happen, because there are a lot of factors that we need to take into account. Obviously, we've seen the announcements by GTB about, you know, their restructuring. So we know that a lot of things are going on behind the scenes across a lot of these big banks, GT, Access, UB, and the rest, and FBNH as well. So it will be very important for us to get those results as soon as possible. I am holding out the belief that between this week and next week, we should start to see them. I'm sure they will come probably almost all at once. And yeah, we'll be able to really know how far we've come and, you know, how far we have left to go. But
do you think, Joshua, do you think those billions of earnings from Dangote Cement that the banks will have some nice share of that?
Well, I'm pretty sure, you know, that was very encouraging. Obviously, the Dangote Cement results were very, very encouraging because it means that other aspects of the economy are in recovery as well, are doing quite well, in fact. But I've always been very optimistic that the banks will continue to grow and that Q2 was probably the worst we've seen of the pandemic and the, you know, economic slowdown. So I think definitely Q3 should be at least as good, if not better. So I'm pretty sure we're going to do quite well.
Okay, thank you. So Akintunde, how are you folks squaring up in the banking industry with the yield, with the fixed income markets?
Well, like I said some weeks back, I think banks, financial firms have to start looking at alternative means of deploying their capital because I think we're in a long haul for the low yield environment. If you look at liquidity level, if you look at the CBN's body language, liquidity as of last week closed about 800 billion with no offsetting investment vehicle to absorb such cash. If we look at CBN's body language, CBN wants more funding to the real sector. And we've started seeing that pop up because with the rate of loan schemes that has been coming out, with the rate of alternative loaning platforms that we've been seeing, you will see that the strategy of the central bank is becoming fruitful. And looking at credit to the private sector, that's up by 11 or 12% year to date. Looking at money circulation, that's about 30-something% up. So I think it's inflationary induced. we'll see inflation keep trickling up. We'll see yields remain sub inflation. But I think it's good for the real sector. The real sector would seem to tend to develop. You see a lot of funding going out. You look at the likes of Dangote Cement, like we just mentioned, the funding cost would average down, and over time you start seeing development in those real sector. Maybe for the banks, they may have to start looking at, or we may have to start looking at alternative with non-interest funding, probably also pumping funds into those real sector to help develop the sector as well. Take more risks to attain some sort of alpha at the end of the year.
I tend to agree with you. I saw Dangote Cement's finance costs down from about nearly 40 billion to about 34 billion on year basis. I think they will begin to start taking more opportunity of this with some of the other lenders also in the market doing some commercial papers via the FMDQ platform and so forth. Let's bring in the North African space quickly so that we wrap up the show this Monday to get everyone back to business. Domestic liquidity, of course, the Egyptian Central Bank reporting on the September period, 1.6% on the uptick. Cobblers Financial Leasing is offering 2.5 billion Egyptian pounds of securitization bonds. We're still talking about this. Bonds. Air Liquide raising its share capital to 40.9 million dirhams in the Tunisian market. Ali, you have just about 1 minute or 30 seconds to wrap up the markets for us in the north.
So I think, Egypt, obviously the currency's been improving a little bit with this renewed risk appetite, lots of liquidity in the system, GDP at around 3%. They're in a good place when you compare it to the rest of us. And I think that will continue to be a positive story. And then your securitization story, there's a lot of this going on, which speaks to an efficient capital markets where people are looking at making the balance sheet work harder, and securitization, I think, is a good way forward. So overall, I think, the Egyptian story remains positive for me. With respect to Morocco, obviously a little bit soft of late, but I think, again, that's another interesting destination for investors, but the carry is quite suppressed compared to Egypt.
Yes, definitely a little bit more surprised. Okay, thank you so much, everyone. Let's leave it there for today. Tomorrow is a Tuesday. Let's get on. The whole party is there over the victory of Joe Biden as the next president of the United States. President Trump is yet to concede defeat, so we don't know how this is going to pan out at the law courts all the way to the Supreme Court, perhaps if he does not concede. But what does it all mean for Africa and the rest of Frontier Africa? We'll continue to digest that from tomorrow, gentlemen, moving forward. Thank you so much, Akintu Suleiman from Greenwich, Alikan Sacho in Nairobi, Street Frontiers Management, and Joshua Odebisi at Vetiva Capital Management in charge of banking analysis. Thank you so much, all of you. Have a great day and see you next time. Bye for now.